I think what we were proud about with our result, obviously improving net profit after tax by 5.7%, but we are really starting to bring together in our retail businesses our digital offer together with our in-store offer. So not only the 35% growth in online sales, but also seeing improvement in the sales density of our store network, delivering strong growth at a store level as well.
Now, a lot of your portfolio is obviously geared towards consumption. Putting the risks aside for a second, we are expecting to see even more of that stimulus passing through into the second half. Is there perhaps the potential for some upside? You know, as housing prices kick up, we've got some construction activity expected to kick up as well. Even for, say, Bunnings, are you expecting any kind of growth there into H2?
Well, what we've noticed over the last 6 months and even the last couple of months is to expect the unexpected. We certainly couldn't have expected the bushfires, the severity of the bushfires that we experienced. Now, that has obviously had a short-term impact. We're also monitoring very carefully the potential impacts of the coronavirus on supply chain. So we are adopting a more cautious outlook here. Overall, we see the Australian consumer as in a pretty good place. We've seen house prices improve. That builds confidence. We're seeing unemployment at fairly low levels. So I think there is a good base to work from. But what we're really focused on is making sure that our offer is as strong as possible, and also focusing on some of our industrial businesses where we see longer-term opportunities for growth.
And expand a little further for us on what's happening within the retail division. You've seen strong revenue and sales growth across those businesses, but Target continues to underperform expectations. What are your options for turning Target around? I know this has been a problem child within the portfolio for some time now. And any plans, a divestment here, either of Target or maybe even of Officeworks? What are you looking at?
Well, what our retail results have shown is that when you get your offer right, consumers will come and you can increase sales and increase profitability. And our businesses, Kmart, Bunnings, Officeworks, I think are doing a very credible job in that regard. You're right that the Target performance was below our expectations. It's worth noting that Target represents a relatively small part of our overall retail portfolio. So what we've announced today is that we will continue to focus on ways to accelerate the transformation of that business, looking at ways that we can leverage some of the great capability and infrastructure within Kmart, for example, our Asian sourcing networks, also look at ways in which we can optimise the store network to try and improve the performance of the Target business.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.